If you're still guessing at market direction, you are trading without an edge. The only thing that matters is seeing the exact market structure logic across all timeframes for 100% fix. Let me prove this right now. Quick note before we start. This video is built on the complete 90-day system. You need to understand the logic behind the exact market structure system, and that's what we're going to go through now. Mastery only works because it perfectly maps market structure logic. We're breaking down that exact logic now. So we're starting on a monthly time frame. And already what you can identify is where we have the current trend in the market. So we have the last break of structure here to the downside. We created this low in the market from this current high. But when you understand how the logic works of this structure, how we teach it inside the 90-day profit trading system, you understand this is now the current high of the range and this is the current low of the range. Anything within this area is where we're going to look at our areas of discount and premium. We're going to look for our areas of supply and demand and our areas of imbalances. Now, what we've actually got marked out for you is an area of monthly supply here in the market. Now, we also have the area of internal structure plotted for you as well. So this is where the market continues to break higher. We had a sweep here in the market, continues to break higher with internal structure. The idea is understanding your internal structure within that swing move. So this is our swing move to downside with our swing pullback. When we see this swing move, let me just take all this off the chart. You can see the structure is mapped with the break to downside, with my current low and high. This is where we look for that internal structure to shift to the downside, pulling back to a new area of supply to continue lower. So we have not just multiple time frames, we can also use our internal structure on our single time frame. This is where the core logic comes in when you go through the 90-day fixed program. It's going to teach you all this concept. So this is where we have a bearish bias. We continue to be bearish on this monthly time frame. We've come back into this area of monthly supply. Now, right now, we've got an area of imbalancing below price, and we've got to see the market wanting to show us the market wants to push through that imbalance before we're going to see a continuation to the next imbalance below. And then eventually we look for the shift in that internal structure to show us that we continue to push down. Then we can look for pullbacks to continue towards this week low. That's the logic behind this single time frame. Now, when we start implementing our multiple time frames, we're going to drop down to the next time frame here being the weekly time frame. So you can see where I've got this previous area of monthly supply we've just come out of. If we zoom into this area on the weekly, you'll be able to see that we've already made a break to the downside here. So let me just grab my tool. Again, we've broken to the downside on this weekly break to downside. We've come off this area of imbalance, we've pulled back, we've had some equal highs here. Now above those we have some liquidity where the market's now swept that liquidity with that big wick to the upside. So now we're seeing the market sweeping this liquidity, a nice close back down. We're looking for the market to want to run this week low in the market. That's why we've seen the market since this high was created, we continue to run towards this week low. So again, we now use multiple time frames on this occasion with our higher time frame. Instead of using the internal structure we saw on a monthly time frame, we can now apply this internal structure, what we're seeing on a weekly structure. So this is our monthly area supply that we have mapped. We know this is our current low down here for the market to run to on a monthly. Now on our weekly time frame, we've already seen that shift in structure, pull back, looking for the run to break structure again to the downside, showing you the continuation of the multiple time frames. This is when we start to see everything starting to align. We're bearish on a monthly, we're now bearish on a weekly. Now we're dropped down to a daily time frame and we look for the same thing here again. So what we're looking for is the continuation of that bearish price action. And again, look, I've got this marked for you already. We've got a break of structure here on a daily to the downside, created this low from this high. This is what classed as the current trading range to the downside. We've seen the pullback into the area of supply. So we've come into the area of supply here, made this push into supply, and then we've run down for this week low. Now the market is now currently potentially breaking structure once again, showing you the continuation of that move. But it's up here, understanding, let's grab my other tool, understanding that this is our weekly area of supply. So we now see with multiple time frame, we have the area of supply here being that monthly supply. We came into the monthly supply. We have the weekly shift to downside, pull back. We run this high for liquidity on the weekly. Now it's a break of structure on a daily, but it shows you what's happening. We come into this area of imbalance to the left, we sweep into it, and then we run down and eventually we break structure on a daily again. So now the daily is aligned coming out of that weekly area of supply. This is what I mean by combining your time frames, multiple time frames here. This is the entire system. Now, if you're thinking, how can I master all this market structure markup every day across multiple time frames for the 100% fix? You're exactly right. It takes dedicated effort. That's why I want to show you the 90-day profit trading system, the complete roadmap to master this logic and achieve consistency. So this is our weekly swing structure. Now we have our daily swing structures now bearish with the weekly. So we expect a continuation for this weekly low as the daily pushes down for it. So now we're reading that multiple time frames across those 3 time frames. We also had that internal structure that we saw on a monthly. Now we can see internal structure across any swing in the market on any time frame. But right now what we're identifying is the use of that multiple time frame structure. So how can we look at this easier? Well, let's just shrink this down. And I'll go now to the next time frame being a 4-hour time frame. Now we can identify where we had, we're not looking at the higher time frame now of the weekly. We know it was coming out of this area of supply, but what we are looking at is our daily area of supply. So now we've shifted focus from that higher time frame focus from this being a daily high to a daily low. This is our push to downside, swing pullback, continuation. Now, unfortunately, on this occasion, the 4-hour was bullish, and we've only now just shifted back bearish. So we had a conflicting signal here. We didn't have a 4-hour aligned with our daily structure. It doesn't mean we can't look to trade from this area, because this is a nice sweep into this area of imbalance, and the market is pushed to the downside. That's where you start understanding your multiple time frames. Things start to align. But based on a daily, we are now aligned with a daily structure and a 4-hour structure. So now we can start to look for sales on a 4-hour time frame with our daily. We have an area of supply here, but we have some leftover imbalance. Now we've broken to downside. We're looking for a potential pullback. If we now drop to a 1-hour time frame, we can identify the same thing with a 1-hour. So our 1 hour is currently bearish. We continue to push lower. We've got a current high up here, and this is our low. So you can see this is our 4-hour high. So from this point, this is our current 4-hour high, our 4-hour low. So we're looking for that pullback. And if we push through this 1 hour, what's that going to show you? It's going to show you the use of multiple time frames, and potentially we could start to see the market do this as it pushes up to the area of supply that we saw on the 4-hour. Then you're looking for that shift back out of structure to pull back into a new area of supply on a 1 hour to start the move back down to take that 4-hour low. So that's how we look at multiple time frames. That's where you're going to use it when you're applying it with your trade. So how does this all work? You're going to pick 3 time frames of your choice. Now what I've got here is currently the 4-hour, but if we go back to a monthly time frame, let's say we're using the monthly time frame as our higher time frame. We're waiting for price to come into our area of monthly supply, which is right here. And if I go to a replay mode quickly, and I'll mark it off where we push into this area of supply. So when we push into this area of supply, we're currently bullish on our internal structure on a monthly. That means what we need to look for is our lower time frame use of multiple time frames, where we're going to go down to the weekly time frame here. So on our weekly time frame, we start to look at what's happening. We're still bullish. Let's zoom into this area. We know we're inside our weekly supply. We're bullish, so we need to see the market shifting bearish. So let's just go forward with price. And now we're looking for this candle to close down. Let's see if we can see a close through. So we get a close through. Now we have a valid break of structure to downside on that weekly. We don't have a valid low yet created, but we have up here area of supply. Now it is a tested zone, and we could see price want to run this high to deeper to we're already filled into that imbalance. So that has been filled already. That's where we're looking for the market just to push above into the area. See if we do get a pull back to the area, and we do. We push through that high. This was an area of liquidity, and now what we're looking for is for this to hold, and we're now creating those equal highs. So you can see we can mark this off. Let's grab that again. as some potential equal highs in the market. What sits above those equal highs? Well, let's mark it out. This is going to be our area of liquidity in the market. So mark that off as liquidity. Press the wrong button. So we have the liquidity there in the market. We want to see that liquidity being taken. We got a nice low here. So now what we're looking for, as we've entered into weekly supply, we're going to look at a daily time frame. So we're looking at a daily time frame. Our daily time frame currently is bearish in structure. Now we know ahead of time that this is going to shift bullish. Now look at how those imbalances held price and we've pushed back to the upside. So now we're creating all this liquidity above this area here. All this liquidity sitting above these highs. What do we have above here? A nice area of imbalance. Remember I said there was an area of imbalance sitting there. That is where I'm going to look for the market to run to that imbalance if we can break higher. So let's see what happens. We break higher and we push into that imbalance. Right there is where I'm going to look for potential trade. Now I'm suggesting here is that we're using the monthly time frame with a weekly, with a daily as my entry. Now you can use any 3 time frames here, but I'm going to use this as an example for you. This is where I'll be looking to take my trade at that area. Now, we'll be looking for the market to run down for this low down here. Why this low? Because this is your current weekly low. So that's how low we're looking for the market to run. So now we're going with the monthly time frame. We've seen the shift out on the weekly time frame. And then we've gone down to a daily time frame and we've seen this area of liquidity created. We've wicked into the area left over imbalance into this area here. And we've seen a nice pin bar reaction. We can take an entry on the break of that pin bar. And we're looking for the market to run down to this low. Now, we are currently bullish looking at structure. So I expect to see the market want to, as we close through this imbalance, run for this low into this imbalance. Once we close that imbalance, I expect to run for this daily strong low. Then once we can eventually close that daily strong low, I expect to run for this low. So from this point, when I've entered this market, I'm going to be looking for the market to run to this area, decide then to take some profit off or look to run for the strong low. So I go forward with price and eventually we run straight through that area. Okay. And then we run for that strong low. So you can see the trade is working. This is where I'll be taking profit on that trade. This is using your multiple time frames here. Let's just go back a step and look at the weekly time frame quickly. So the weekly time frame, we see the sweep of those highs into where we saw that area of imbalance left over on the daily, where we took the entry off the pin bar. We're also coming out of this area of monthly supply, which is already bearish on the swing pullback into supply. We've seen the shift out on the weekly time frame, pulling back into the weekly supply, sweeping that high. Down to our entry time frame being that 3rd time frame of choice being the daily. This is where we see that sweep pushing up into that previous year of imbalance we saw. So now we're looking for the market to already hit our first target to continue for that final target. Let's go forward price and you can see the market starting to move sideways. We pull back in, we break structure on the daily. Okay, again, we've made that continuation, pull back into a daily area of supply again. That's where we could look for a new entry on a lower time frame, where we're using multiple time frames. So now we continue forward to current price, and this is where we are now on current price. So we're seeing the continuation of this movement, and we're looking forward to run for this low. Remember, we're getting close to that final target. We continue to be bearish with structure on the daily. Everything is aligned. That's what I mean. You use your multiple time frames for alignment. Before we wrap up, if you're still second guessing trades or staring at the chart, not knowing what the next swing means, that's exactly why I built the 90-day program. It takes structure and makes it step by step so you know exactly what to do instead of guessing. Traders like Danny came in after losing nearly $300,000. He didn't just learn structure, he finally knew how to trust it and rebuild his trading. If that sounds like where you want to be, the link to apply is in the description. Seats are limited, so check if one's open for you. If you want to see the companion tool that automates this entire system in seconds, watch this next video on market structure that shows the process inside the tool.